Let us calculate capital profit, revenue profit, and minority interest with the help of an example. X Limited purchased 60% share of Y Limited on 1/7/2022. On 1/1/2022, the balance of their P&L account and general reserve were 1,50,000 and 1,60,000 respectively. On 31st December 2022, the balance sheet of the Y Limited, it showed a P&L account balance of 4 lakhs and general reserve of 3 lakhs. We are being asked to calculate the capital profit and revenue profit here, which is nothing but our pre-acquisition profit and post-acquisition profit. So, from this question, it is very clear that X Limited, it is the holding company, whereas Y Limited is the subsidiary company. And Y Limited is not a wholly subsidiary company since X Limited has purchased only 60% of the shares of Y Limited. So here it is clear that X Limited, it holds only 60% of Y share. It was on 1/7/2022. And from the question, it is very clear that the accounting year of this particular company, it is from 1st January 2022 to 31st December 2022. So here extra we have few more details, that is the balance at the beginning of the year in P&L account and general reserve was 1,50,000 and 1,60,000. So these two items obviously shows as to be the pre-acquisition profit because it has taken place before the acquisition. So 1/1/2022, which is before the acquisition on 1/7/2022. So along with that, they have also provided the details regarding the balance of P&L account as well as general reserve at the end of the year. So at the beginning of the year, P&L account, it showed a balance of 1,50,000 and general reserve, it showed a balance of rupees 1,60,000. At the end of the year, it is clear that the P&L account, it is equal to 4 lakhs and general reserve is equal to 3 lakhs. So now along with this, we also know the pre-acquisition and post-acquisition period. So during the pre-acquisition, it was from 1/1/2022 to 1/7/2022, or it could be said as 1/1/2022 to 31st June 2022. So the post acquisition period is from 1/7/2022 to 31st December 2022. So it has a ratio of 6 months is to 6 months. So whatever the amount is, it has to be divided equally. So here we know what is the profit as well as the reserve. So together the reserves and surplus at the beginning as well as at the end. So in order to calculate the reserve, which is during that earned during that particular year. So in order to calculate your capital profit, you should know what are all the profit that that particular organization have earned during that pre-acquisition profit and before that. So we have in hand on 1/1/2022 the P&L was equal to rupees 1,50,000, which obviously contributes to the capital profit, and also the general reserve is equal to rupees 1,60,000. So these two items obviously contributes to your capital profit. So now we have a profit which is earned during this year, that is the reserves and surplus which that particular organization Y have earned during the year 2022, that is from January to December. So here, in order to calculate that, we can total up the reserve, that is general reserve and P&L account at the end of the year, which is equal to 4 lakhs and 3 lakhs. So the total reserve at the end of the year is equal to rupees 7 lakhs. So now if we reduce the reserves and surplus during the beginning of this year, that is at the beginning of this year, we can easily get what is the reserves and surplus earned during this particular year. So beginning of the year it was equal to 1,50,000 plus 1,60,000 is equal to 3,10,000. So we get an amount of rupees 3,90,000 as the reserve earned. Reserve as well as P&L. So P&L and reserve earned during the year. So this is for the whole year. So since the acquisition took place on 1/7/2022, we have to divide this particular amount. So pre-acquisition reserve and surplus. So it is equal to 3,90,000 into 1 by 2. That is 6 by 12 months. So it is equal to 1 by 2. So we get an amount of 1,95,000. So this contributes to the pre-acquisition profit. So capital profit is equal to the amount which we have in hand already, that is 3,10,000, which we got out of the opening balance, plus 1,95,000. So which is equal to 5,05,000. So this is nothing but the pre-acquisition. So the profit which is earned by this particular institution before the acquisition of the Y Limited. So next we have to calculate the revenue profit, which is nothing but the profit which is earned by this organization after the acquisition. So whatever amount the particular institution have after the calculation of your capital profit, it constitutes your revenue profit. So from the total amount, so the surplus and reserve earned during the year, we have to calculate for the last 6 months. So which is equal to 3,90,000 into 6 by 12 or 1 by 2, which is equal to rupees 1,95,000. So this is nothing but your revenue profit. So we have calculated the capital profit and revenue profit now. So next is your minority interest. So minority interest, what is mean by minority interest? We all know after the share, that is majority of shares of that subsidiary company is held by the holding company, and whatever remaining share is the minor amount of share is held by an outsider or the minority shareholder. This is called the minority interest. So from this question, it is clear that the company X Limited, it holds only 60 percentage of Y shares. So here the remaining 40 percentage becomes the minority interest. So from the capital profit and revenue profit, we have to calculate the 60 percentage which is for X Limited, and the remaining goes to Y Limited. So let us calculate the values. So here let us consider X Limited and minority interest. From the above given information, it is clear that the particular company it has, so X Limited has 60 percentage and minority have 40 percentage. So we have a capital profit which is equal to 5 lakh for 5,000. So 5 lakh 5,000, we have to divide it among both these parties. So 5 lakh 5,000 into 60 percentage, which constitutes 3 lakh 3,000, and the remaining 2 lakh 2,000 will be for the minority interest. Similarly, revenue profit, it is equal to 1,95,000. So out of 1,95,000, 60 percentage will be for X Limited, and the remaining amount, so that is the 40 percentage will be for minority interest. So now let's total it up and find the share of each party. So for X Limited, it is equal to 3 lakh 3,000 plus 1 lakh 17,000, which is equal to 4 lakh 20,000. Whereas for the minority interest, it is 2 lakh 2,000 plus 78,000, which is equal to 2 lakh 80,000. So in this question, it is very clear that the capital profit is equal to rupees 5 lakh 5,000. Revenue profit is equal to rupees 1 lakh 95,000, and the minority interest is equal to rupees 2 lakh 80,000. So Here, the capital profit and revenue profit will be shown on the reserves and surplus side of consolidated balance sheet. Whereas this particular minority interest will be shown on the liability side separately after recording the reserves and surplus.